Today we are talking about consumer sentiment. This has been a big topic lately given high inflation levels. This is also being discussed within some recent corporate earnings announcements. This week, Minneapolis-based Target Corporation released their quarterly earnings results. The announcement was viewed rather negatively as the stock price initially declined 25%. The Target report noted a substantial drop in earnings compared to year-ago levels. The main culprits were higher than expected expenses and a change in consumer spending patterns. Now, one takeaway from the report was that elevated inflation level for companies and individuals is impacting spending decisions. Let's now dig into consumer sentiment in greater detail and look back at history to see what type of guidance we can extract. First, the University of Michigan Consumer Sentiment Index. This is a report with data released 2 times per month and is used to estimate future spending and saving for individuals. This is a survey-based report that asks several spending questions aimed at determining if respondents are worse off, the same, or better off now than during previous time periods. Most recent index data showed consumer sentiment declining to a level not seen in over 10 years. Within the chart on consumer sentiment, what you can quickly see in the data is that sentiment often swings back and forth like a pendulum. Also within this chart, we can see the low levels of consumer sentiment we have now have also occurred a handful of times in the past, such as in 1975, 1980, 1990, 2008, and in 2011. Next, we're going to overlay the level of inflation, the US Consumer Price Index in green, on top of the same chart of consumer sentiment to dissect this a little bit further. Observations: when inflation is high, consumer sentiment tends to be low. This makes intuitive sense. As I'm shopping and seeing higher prices, my dollar's not going as far as they used to, I feel worse about my spending and perhaps change my spending patterns. This feeling is validated by Target's recent report on consumer activity. Another observation: inflation, like consumer sentiment, moves like a pendulum at times. As inflation percentages decrease, consumer sentiment typically increases. So why does this matter? Well, we observe that the rate of change in inflation will decrease at some point. In fact, the most recent inflation report showed a decline from the prior period. We also believe that the pendulum of consumer sentiment will swing back to more favorable levels. This has historically occurred as inflation percentages decrease. Now, from here, we ask the question, what tends to occur in the stock market after lows in consumer sentiment? What we find out is that when consumer sentiment is at a low point, the one-year results for stock markets after the low point tend to be pretty good. In these 5 cases, again, going back to the 1970s, we find that on average, the stock market has increased about 23% in the year following a low point in consumer sentiment. Also worth pointing out that in all 5 of these cases, the stock market was positive 1 year later. Now, this is not meant to be a prediction in the short term. We don't know when a market recovery will develop. However, we firmly believe that, like all other declines, we will get through this. Okay, so let's summarize all this information. Consumer sentiment is currently low and inflation is high. This is not the first time we have seen this setup. Consumer sentiment and inflation often move like a pendulum, swinging back and forth. Historically, after periods of low sentiment, the stock market has tended to perform quite well. Weaving this information back into portfolio management, we recognize that predicting the short-term movements in any index with any consistency and accuracy is nearly impossible. Rather, we emphasize investing across time periods from short-term to long-term based on your financial life. At some point, markets will recover, and in diversifying investments based on time periods, we believe can help navigate through the uncertainty.